Hello, compliments of the season, ladies and gentlemen, and welcome to another promising session as we are going to be starting the week on a fresh new look. Well, today for this week, we have four major pairs that we are monitoring. We have two major pairs, I guess, and two commodities, which are the US oil, the XAUUSD, and then we are also going to be taking a look at the GBPUSD chart too as well, and the USDJPY. And like I normally say here, what we simply do here is to review the lower time frame, which is the time frame we're actually using to take a position for the week. And if you had not watched my analysis on this instrument that I've just mentioned, I would advise you to check on them, try to watch them so that you can have a background knowledge of where we are coming from and how we got to this point on the lower time frame. So please check it out so that you will not so that you can bridge that knowledge gap between you and me. So once again, I welcome you all to yet another session, and it's very important I state here that today is a public holiday and most market are not going to be opening today, so there is a high tendency that market will be starting on a very slow note this morning and gradually gain momentum probably later into the New York session today. So we are going to be looking at this on a general note. We are going to be looking at what to do with this kind of current market structures that we are having at this point. So with that being said here, let's dive into the business for the day. And the first thing we are going to be doing, as usual, you know what we do, is to keep tabs with the fundamental aspect. And doing that, we need to look at the economic calendar to see if we have any macroeconomic event for today. But in matter of fact, because today is a public holiday, definitely we do not have any macroeconomic event today. So we shall be looking forward to Tuesday. But I think I just saw this pop up here this morning. That is the Bank of Japan's governor nominee. That's who is going to be having a speech. I think in an hour from now. I didn't see this yesterday, but I guess this is a new development. So we are going to be looking forward to that one too. And since we are going to be monitoring the USDJPY, we are going to be looking forward to see what his comments are, what his policy comments are, and how it's going to be impacting the Japanese yen, and how it's also going to be affecting the psychology in the market. So we are going to be looking at that one too as well. Then on Tuesday we don't have anyone. Then the next one is coming in on Wednesday for this week, April 12th, and that is the consumer price index. And on the consumer price index, the data that we have, the previous data that we have here is 0.5%, so we're expecting a 0.4. And so besides the non-farm payroll that came in last week Friday with a below expectation reading, the consumer price index is one event that everyone will be looking forward to, as it also gives the measure of price movement by the comparison between the retail prices of a representative shopping basket of goods and service. So this is a very high impact event that everyone will be looking forward to tomorrow as well. And one thing we are going to be doing today on the chart is to see how the market is going to be anticipating this event tomorrow. So are we going to be seeing a consolidation phase in the market? Are we going to be seeing a bullish momentum or a bearish momentum in the market in anticipation of that event? So these are things that we are going to be taking note of while we monitor price action. So with that being said here, let's dive right into the current market structure. Okay, another one here for tomorrow is the Bank of England's governor. Governor Bailey is going to be having a speech tomorrow, so everyone will also be looking forward to that one too. Since we are monitoring the GBPUSD, we are going to be looking forward to how that is going to be of impact to the psychology of the market. So with that being said, let's dive into the chart. And the first commodity we are going to be looking at today is the US oil. And if you recall vividly, last week we really did not have any major move throughout the course of last week, as we witnessed a very choppy situation in the market. Okay, Dele, I see your comment. Good morning to you. How are you doing today, Dele? Trust you are doing well, and I'm glad to have you around. All right. So with that being said, let's continue with our chat. So right here on the US oil, you would have observed, and if you had watched my video, I laid much emphasis on that consolidation phase that happened throughout the course of last week. So we saw a situation here where price action continued to range between the $81.20 level and the $79.50 level, to further emphasize that there is an indecision in this market. And if we take a step back and look at the 4 hours time frame, having an holistic point of view, you remember we saw that situation last week where the week started with a bullish gap, as we saw about 49 pips bullish gap around this area before this consolidation happened. And we all know why that actually happened. It was as a result of the OPEC Plus members' decision to cut oil production by 1.77 million barrels per day. I think that was a total cumulative number for all the members that pledged to cut oil production, which dovetails to about 3.66% of the global demand, which is quite high. And there is this projection in the market that there is a likelihood that the oil prices might skyrocket to the upside based on that latest development, and that resulted in that bullish gap that we noticed here at the beginning of the week. But unfortunately, throughout the course of last week, we really didn't see that traction in terms of that bullish momentum that everyone was looking forward to. And what we saw was actually a consolidation phase where it further emphasized that there is an indecision in the market, and at the same time also it also gives a clue into the economical crisis that is currently going on in the last couple of weeks, from the banking crisis to the Ukraine-Russia war, and the latest one, the cut in oil production. So these are things that are actually not making participants in this market find a head stand on where to go. So what we are going to be doing on this particular market structure is we have no choice than to remain patient here to wait for that signal to happen. It could take quite a while, and considering today is a public holiday, we begin to see some retrace, some consolidation phase also happening here. So I shared an update this morning where I emphasized the new setup that is gradually evolving on the chart. Let me zoom it in so that you can see what I'm talking about here. So we can see that the week also has started with a situation where price is currently trading between the $81 level, which happens to be the resistance line for this week, and then we have the support line for the week at around the $80.45. So we have about a 55 cents range here where price action is currently trading. And one more thing about this current structure is the fact that it shares a confluence with that bullish trend line that we identified in that video. So remember, I shared in the video, I talked about this bearish trend line, and you can see price is currently trading above that structure, though we have attempted by the sellers to break down that level here. So we are going to be looking forward to see how price action will be reacting to this structure and the bullish trend line that we have here. So you all know what we look out for whenever we have this kind of simple setup. We want to see price either break down that support line at the $80.45 level for selling opportunity, or the breakout of the $81 level for buying opportunity. So with that expectations in mind, we should be having a sell stop order right below the $80.45 level, because if price action breaks down that support line at the $80.45 level, what we are going to be seeing at that point, the breakdown happens, is that we will be having that bullish trend line here breach to the downside. So that is a signal that we might be in for probably a retracement phase in this market. Because if you look at the structure here, look at that channel here, and look at the impulsive move that got to this point, you will see the strength of the sellers around this area, around the $81.27 level, giving a clue into how sellers are trying to negate any attempt by the buyers to break out of that structure. So if a breakout of this channel happens today, it will have broken down this trend line here, and that will be a signal that we are going to be going bearish. And if you are a cautious trader, you might want to wait for a retest of that $80.45 level on our lower time frame. Look out for selling pressure where buyers find it difficult to climb above the $80.45 level. Then we could join that decline to the downside. Then a further breakdown of the $80 level will welcome more opportunities. The $79.50 level will also welcome more opportunities in this market. So that is what we are going to be seeing from this current market structure to sell the US oil. However, if price action climbs to the upside instead and start finding higher highs, then the breakout of the $81 level will confirm a potential bullish momentum here. But we'll still need some confirmation to happen here. But a buy stop order above the $81 level still looks promising at this point. And if price action continues to the upside, then we could move our stop loss accordingly to reduce the risk on that position in that trade. And as long as price remain above that trend line, I'm of the opinion that we are very, very good to be in a buy position in this market. So this trend line here is going to be our yardstick for trading activity for this week. So what this simply means is that as long as price remain above that trend line, we shall feel comfortable in our buy position. So if the bullish momentum continues in such a way that price action breaks out of that resistant line at the $81.20 level, then that will be a beautiful signal to add more position to our existing trade, as it would have taken out all the sell position along the resistant line here at the $81.20 level. So these are things that we are going to be looking at today. So how we implore us to remain very, very patient at this point. Whenever we have this kind of consolidation, indecisive phases like this, we need that level of patience to be able to take advantage of any potential trading opportunity in this market. So we are looking forward to either a breakout of that resistant line at the $81 level for buying opportunity, or the breakdown of the $80.45 level for selling opportunity, as we need a breakout of this channel to give us a clue into where price action is likely going to be going for today. So that is my view here on the US oil commodity for today. And if you have any questions, let me know in the comment section, and I am willing to be of help in that regard. So that is that on the US oil, and I will be moving on to the next pair. So in the absence of no questions, I would assume that we are on the same page here. So moving on to the next pair we are going to be looking at this morning is the GBPUSD. And I hope you've watched this my publication on this pair. The link is in the description box of this video, so try to watch it so that you can have a background knowledge of how we got to this point, because I will basically be putting my scope around the 1 hour time frame, where we are going to be using that structure there to decipher what our next line of action will be for today and for this week actually. So here we are on the GBPUSD 1 hour time frame. And what I did here on the 1 hour time frame, okay, let's go into the 4 hours time frame so that we can have a background knowledge of what I'm talking about here. So on the 4 hours time frame, this was the first thing I was able to identify after taking into consideration price activity since the second week of the month of March. And if you look at the structure closely, you will see what a beautiful bullish momentum we have here. And after connecting the series of higher lows in this market, you can see we have that bullish trend line, which further emphasizes the strength of the buyers in this market. And the last time price action tested that bullish trend line was here. That was at the first day of the month of April. This month we saw the bullish momentum. Price action climbed into the 1.2520 level, and we saw this move to the downside, which likely might be a retracement of that impulsive move. And one interesting thing about that retracement is that is back at that bullish trend line, where you would agree with me that we are at a very critical point in this market. So price action trading along that bullish trend line is a very beautiful signal that we need to be very patient here, as anything could actually happen. We could see price climb to the upside from this juncture in the market, and we could also see sellers take over this market in such a way that we have the first breakdown of that bullish trend line to signal a bearish tone in this market. So this is somewhere we want to be very, very careful about. Hence, we need to understand how participants in this market will be reacting to this level. And as a result of that, if you watched my video, you will see that we identified a key level around the 1.24200 level, which also shares a beautiful confluence with that bullish trend line. And if we go to as far back as the later part of the month of March, you will see how the 1.2420 level has been a major determinant of price action. So look at what happened here on the last trading day of the month of March. We saw how this level was a strong selling niche, pushing price to the downside from that point. Then at the beginning of the week, we saw attempt by the sellers to continue that momentum, but this was met with strong resistance from the buyers, which later led into that engulfing bullish candle that broke out of that structure. And you can see price is back into that level here. So we are going to be using this key level as our yardstick for trading activity for this week. So what this simply means is that if price action trades below that key level, we shall be looking out for selling opportunities on our lower time frame. And if price action continues to trade above that key level, we will be looking out for buying opportunity. So you can see how it shares a beautiful confluence with that area and how important that structure is at this point. So now the next thing we want to be doing right now is to scale down to a much lower time frame to see how participants in this market has been reacting to that key level to now decipher what our next line of action will be. Now there is a trend line here, which a breakout of that trend line to the upside will confirm a bullish momentum, and the rejection of the trend line as well will confirm selling position here. So let's scale down into the 1 hour time frame, and here we are on the 1 hour time frame. And one thing I made mention of on my public platform this morning was the fact that price has been consolidating since the beginning of this week. As you can see, price action is currently trapped within the 1.24350 level, which happened to be the resistance line for this week. And then we have the support line for the week at around the 1.2400 level, which also shares a confluence with that bullish trend line that we have here. So will this buy pressure here continue to the upside? Well, that is a question that needs to be answered if we take a closer look at this current structure we just identified here. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of that resistance line to the upside or break down the support line to the downside for trading opportunities. So with this situation we have here right now, is it advisable to have a buy stop order above the structure? Well, at this point I will say yes, and the reason why that is simply because if we take into consideration that bearish trend line that we identified on the higher time frame after connecting the series of lower highs, a breakout of that 1.24350 level would have broken out of that bearish trend line, which is going to be a sign that the trend line may no longer, please note the word I just used, may no longer be strong enough to hold the bearish momentum in this market. And if that is going to be the case, then definitely we want to be looking out for buying opportunities above that structure. So if a breakout of the structure ever happens today, we want to have our buy position triggered at that point. And if you could wait for a retest of structure also, it could be another way of being conscious about it. But one thing I want to state here is that we could have a breakout of that structure and price action does not come back to do a retest of that structure. So if you could afford a stop loss of about 35 to about 40 pips, that is, are we having our stop loss somewhere around the 1.2400 level, which happened to be the support line, then we could have afford to take advantage of that move. And if price action continues to the upside in such a way that it continues to find higher highs, remember we have a structure here at the 1.245 where an opportunity to add more position is very, very likely at that area. So these are things that we are going to be looking at today on the GBPUSD. So it's looking more bullish on this market, as we can see the buy pressure resuming again at that bullish trend line that has been supporting that bullish momentum for the last 3 to 4 weeks now. So let's continue to hope that price will continue to the upside from this level. Now, in as much as we're looking out for buying opportunity, you know how I do it here. I always ensure that we keep our mind open. The financial market is a very, very fluid environment, and for us to be profitable in this environment, we also need to be as fluid and flexible as possible so that we can be in alignment with price movement. So even if we have a particular direction that we are expecting price action to go, we should be ready to be able to change our perspective as soon as price is moving in the opposite direction. So that is why whenever I do my analysis, I'll ensure that we also have an idea of, if the opposite happens, what are we going to be doing? So that's why most people, when they hold on to a bias, they find it very, very difficult to change their bias because they are not prepared for it. But what we want to be doing here is to ensure that we are prepared to be able to take advantage of that move when it happens. So in this kind of scenario here, where we have an expectation that price might likely break out of the 1.24350 level because of the buy pressure we have been noticing around the 1.24 level here, we should also take into consideration the bearish momentum that began during the course of last week's trading session, which looks like a retracement of that previous impulse leg that we identified on the higher time frame earlier. So if that is going to be the case and selling momentum is going to be coming in, what do we want to be seeing on this chart that will make us feel confident to sell the GBPUSD at this point? Well, what I want us to see here for us to sell is to see price action break down that support line here at the 1.2400 level. And if you look at that structure there, you can see how it shares a confluence with both the bullish trend line that we identified earlier. You can see the bullish trend line here. You can see the second one here. So if price action ever breaks down the structure, it would have breached that bullish trend line, giving us a clue that buyers could no longer hold that momentum. So a breakdown of the 1.2400 level will be welcoming a sell position in this market. And if a retest of structure happen, which is very likely going to be happening, that is retest of the 1.24, or even the retest of the bullish trend line that was broken to the downside. And in fact, we also have the bearish trend line here, which we identified earlier also around that area. So it's a very important confluence that we have around this area. So we need to be very, very careful here. And if that happens, then we want to be adding more position to our existing trade. For that sell position there, our stop loss will definitely be above that resistant or around that resistant line at the 1.24350 level. So that is my view here on the GBPUSD for today. So let's keep monitoring price action and be rest assured that I will be with you on my TradingView platform to give you an update in that regard. Then I'm talking about updates here, and regarding what Daily introduced last week, I've already started. I'm going to be sharing my Telegram my Telegram channel for you to join. And let me see what name I named it. I think I forgot the name. I will check that name now and see if so. I would hold on a second, please. Let me open that up. And okay, all right, okay. So it is called Trading with Master Sheriff. So you can search that up on your Telegram, and probably tomorrow I will include it in the scroll below the screen so that you can see it. So it is Trading with Master Sheriff. So join me there, and I will try to start updating my ideas on that platform as time goes by. Okay, all right. So that is that on the GBPUSD. So we shall be moving on to the next pair, and the next pair we are going to be looking at today is the XAUUSD. And so that is the gold commodity. So the last time we traded the gold was on Thursday, and the market was closed on Friday due to the Easter. I think due to the Easter holiday, the market was closed and we couldn't do anything. And in fact, we couldn't see how the market would have reacted to the NFP result that came in on Friday. And right now we have a situation here where price action happened to have broken down that $2,000 mark. Please kindly watch my video on the XAUUSD so that you can have a background knowledge of what I'm talking about here. So if you watch that video, I laid emphasis on the holistic point of view in the market, what is really happening on the higher time frame from a technical standpoint, and how important the $2,000 level is and the $2,032 level is within this current market structure. So right here, on the 1 hour time frame, you would notice that price action has been bullish for quite a while. And in fact, we saw during the course of last week's trading session, our price action tested the highest point at the $2,032 level for the first time this year. And I made emphasis on the importance of understanding the type of psychology that is expected around that area. And one thing I said here was that we should also take into consideration the fact that whenever price action finds a new high, there is a tendency that participants in this market will go through the emotion of fear. And what's this fear all about? The fear is all about getting into a new place for the first time. Whenever price action gets into a new phase, especially for those who are taking advantage of that move from a much more lower price, as soon as it gets into the structure, we normally see certain pressure around that area, as majority will want to start doing some profit taking activities, which taking some profit off their positions by selling it off. And this is always reflected on the chart in the form of a retracement or a consolidation phase. So there's always a likelihood that a choppy situation will happen. Then after some time, people will get used to that price level or the price zone, after which then you will start seeing a momentum gradually coming in that will be strong enough to break out of that level. And if you look at what is happening here, even if you look at when price action tested the $2,000 mark, that was a couple of weeks ago. Can I show you? Okay, this was the $2,000 mark a couple of weeks ago. We can see what happened. We saw the emotion of fear, so it feels uncomfortable for price action, and we begin to see selling pressure around that area. And following the sell pressure, we saw a choppy situation where there was an indecision, fear, dilemma around that area before we finally saw the breakout of that level. And I'm very sure the same thing will also happen after price action has found a new high around this area. And as you can see, let me zoom it in, we can see how price has fell into a choppy situation before we started seeing lower lows and lower highs. And right now that price action has broken back below the $2,000 level during the early hours of today. Are we going to be seeing a sell momentum in the market, or are we going to be seeing this as a false breakdown where price action could still incite another wave of bullish momentum? Well, it's a very simple setup we have here that we can use to guide our trading activity for today. Now, the first thing I did here was to look at the price action activity since the beginning of the week, and you can see what happened here. The week has started on a bearish note. As you can see, price action started at around the $2008 level. We saw an engulfing bearish candle breaking down that key structure at the $2000 mark, and then as soon as price got into the 1989, we begin to see some buy pressure resume around this area. And so because of this situation here, we have a beautiful channel that we are going to be using to guide our trading activity for today. Now, in addition to that channel, if you look at what happened as soon as price tested that highest point at the $2032 level, we saw price action go through a lower high situation here. And when we connect a series of lower highs, we have a beautiful bearish trend line, which we are also going to be using in conjunction with that flat channel we just identified here to guide our trading activity for the week. Excuse me, I'm so sorry about that. So right now, we are going to be using the structure, as I said earlier, as our yardstick for trading activity today. Now, the fact that price action has broken down that $2000 level also will make this another structure we want to be including into this level. So now that we have this whole knowledge figured out at this point, what are we going to be looking out for to either buy or sell the XAUUSD today? Now, to sell the XAUUSD today, we want to see price action continue to trade below the bearish trend line that we just identified here. So anything below the trend line will definitely be giving us the comfort of selling the XAUUSD. So when price action remains below the bearish trend line, we shall be looking out for selling opportunities, probably in the form of a reversal pattern, selling pressure below structure in our lower time frame to be part of a move to the downside. So if I'm going to give you a visual illustration of what I'm talking about here, so following this impulsive move to the downside, we started seeing some buy pressure here. So there is a chance that price could come into the $2000 mark and start doing some selling pressure around that area where buyers find it difficult to climb above that level. And if that happens, we want to be getting ready to join a sell momentum where a breakdown retest of structure will welcome a sell position, and a further breakdown of the 1989 will welcome additional sell position to our existing trade. So that is one perspective to this. Then another thing that could happen here is price could come into the trend line to respect it one more time to incite another wave of bearish momentum, and then we could add more position at the breakdown of key structures like the 2000, the 1989, and continue to ride that move to the downside. Then another thing that could happen here is price may not even get into that $2000 mark, neither this one or not this one, and instead continue to drop to the downside. Instead, then a breakout of the 1989 will just give us an opportunity to sell. So we already have a sell stop order below the 1989 level. I think I shared this on my public platform this morning, and let's quickly run through that one and see what I'm talking about here. So this is it on the XAUUSD. So we have, okay, this is what I just said. I said price action finally breaks down the key level at the $2000 level to start the week on the bearish note. The bearish trend line and the channel between the 2008 and the 1989 zone will be a guide for trading activities for today. So this is what I just shared here. So we still remain patient here. We have no trade yet, so we are remaining very patient at this point. Our sell stop order below the 1989 to join that trend continuation to the downside. So now with that being said here, it's looking very bearish. We have a key level broken, that is the $2000 level, giving us further clues that sellers are gradually getting momentum in this market. And if we are looking forward to the CPI tomorrow, and I'm of the opinion that we might likely see a traction in the dollar. So we are going to be knowing this if the New York session opens in 3 to 4 hours from now. We are going to be seeing how the New York market will react to the current market structure on that one. So in as much as we are looking out for selling opportunities in this market, which I've explained on how we want to take advantage of this, the most important thing we want to be seeing is selling pressure as long as price remain below that trend line to join a bearish move. Now, in as much as we're looking out for bearish momentum in this market, If at any point in time today or during the course of the week price action breaks out of this trend line, then at this point we want to be seeing the potential that price action might evolve into a momentum shift. So a breakout of that trend line, if you look at this closely, if price action ever breaks out of that trend line, you will see that it would also have broken out of that resistant line at a $2,008 level. Remember, this is where price action started this week, so this is the highest point price action has ever been for this week. So if a breakout of that structure happens, then we want to be seeing this as a signal that buyers are probably getting in, as a trend line is no longer strong enough to hold that selling pressure. And if we scale down to our lower time frame and we begin to see buying pressure right above the structure, we shall be in for adding more position to our existing trade, where we shall be monitoring how participants in this market will be reacting to the $2,032 level to decide if we are going to be adding more buy position or getting ready to join another sell in this market. I told you that area will still have some level of fear around that area because we're still not yet used to that new high at this particular point in time. Then we also have a structure here. When I looked at my chart here, I will also have a structure here at the $2,020 mark, which is also a very strong psychological level considering the round figure of that price, where a breakout retest of that level also could welcome more trading opportunities in this market. But be rest assured that I will be with you on my public platforms to give you an update on what my expectations are if price action ever gets into that area. But for the meantime, we are holding on to a bearish bias here, but if the contrary happens, we're also going to be on standby to catch that move. So that is that on the XAUUSD for today. If you have any questions, let me know right in the comment section. So moving on now, we are going to be talking about the last pair for today, which is the USDJPY. And USDJPY was one of our profitable trades last week, as we managed to take advantage of some bullish momentum during the course of last week. Now, going into the new week right now, what is our expectation on this pair? Well, first of all, I hope you watch my video on the USDJPY. The link is in the description box below. Try to watch it. It's like a 50-minute long video, and I made sure I put timestamp in the description box so that for those who want to skip into where they want to focus on, I already put a timestamp there, so you can just click on it and it will take you right into where you want to watch. So watch it so that you can have a background knowledge of what I will be talking about here. So right here on the 1 hour time frame, in that video we acknowledged the 132.400 level, which happened to be our key level for the week, and we also had the 133.500 level, which happened to be the neckline of that reversal pattern we identified on the daily time frame. I think for the sake of clarity here, I'll just have to show you something on the daily time frame, which it's very necessary I let you know so that you can have a better understanding of what I'm talking about here. Now, if we scale up into that daily time frame, this is what we could see here on the daily time frame, which I laid much emphasis on in that video. So I will delete this one so that we can have a clean chart. So I made mention of the fact that the 131.00 level has been a strong demand zone in the last 9 to 10 months in this market. As you can see, as soon as price gets into that level, we can see sellers had found it very difficult to break down that structure to the downside. So every time price action comes into that area, we have been witnessing buy pressure resume from that level. And if you look at what happened at the beginning of the year, we saw how the bullish momentum began from that same zone, springing out of the 131, breakout retest of structure, which finally led to the breakout of that bearish trend line. So this was a trend line that was supporting bearish momentum since the month of October last year, and we saw the breakout happen here in the month of February. And you all know the theoretical perspective to this. Whenever we have a breakout of a significant structure just like the one we have here, we expect that price will come back and do a retest of that structure to incite another wave of bullish momentum to the upside. And if you look at what has been happening in this market in the last couple of weeks, you will see that price action is actually respecting that theoretical perspective. We have a retest of the bearish trend line that was broken earlier in the month of February. And then one thing about this impulsive move here is that I can see price action gradually transitioning into something like a double bottom structure. You can see we have a new high, a higher low here. Price was unable to break the previous low, and it appears after price tested the 131.00 level, we begin to see buy pressure resume around that area, and there is a high chance that price could come back into the structure here. So this is a potential reversal pattern which is not yet valid at this point, as we still need price to get back into the 133.50 level to give us a clue that this reversal pattern may gradually turn out to be a valid one. And you all know what we do here. Whenever we have a reversal pattern like the double bottom structure, the next thing we want to be doing is to identify the neckline of that reversal pattern. And look at what we have here. We have the 133.50 level, which has been a major determinant of price action, at least in the last 4 to 5 weeks now. And that is going to be serving as the neckline of that reversal pattern that we are looking forward to. So if the bullish momentum continues, and then a breakout retest of the 133.50 level will be an opportunity for us to join the trend continuation to the upside. Now, with this expectation in the market, how are we going to wait for price action to get into the 133.500, break out of that structure for our buying opportunity? That will take a long time if you ask me. And if we look at the distance between this area and the where price action is currently at and the neckline area, we have a whooping 130 pips. Now, because of the situation, we cannot just keep our fingers crossed waiting for a huge 130 pips to happen before we join that bullish move. So as a result of this, I scaled down to a lower time frame to see if I could identify a technical structure that will expose or reveal the build up of a bullish momentum behind the scenes. And to do that, what I did here was to scale down to a much lower time frame. And I think when I scaled down into the 4 hours time frame, I was able to identify a simple setup here that we could actually use to guide our trading activity for the week. And this was what I was able to spool out on the 4 hours time frame. So what I did here was to take into consideration price activity since the beginning of the month of March. And when you look at this closely, you will see how price has evolved into a bearish momentum. And after connecting the series of lower highs here, we have a bearish trend line which further emphasizes the strength of the sellers at this particular point in time. Now, if we zoom into the current structure, you would agree with me that we are at a critical point where price action is currently trading just exactly around that bearish trend line. So anything could actually happen. Remember what I said earlier, whenever price action is trading around a trend line, be it a bullish trend line or a bearish trend line, it is very, very important that we take a level of patience around that area, as anything could actually happen. We could have a breakout of the trend line. We could have price action respect that trend line. So these are things that we want to ensure that we understand how participants in the market are going to be reacting to that level. So as a result of this, we have a key level at the 132.40 level, which has also been a major determinant of price action in the past. Sorry for, don't mind my wobble my wobble highlight here. So it has been a major determinant of price action for quite a while, and it also shares a confluence with that bearish trend line. So this simply means that we are going to be using it to guide our trading activity for this week, where price action trading above the 132.400 will look out for buying opportunity above that structure. We look out for buying structures. Then if price action drops below the key level, we look out for selling structures. So you can see the importance of understanding how participants in this market will be reacting to the structure. So whatever happens here during the early hours of the week is likely going to be giving us a clue into what could happen during the later part of the week. So when we scale down to the lower time frame, this was what I was able to see cite here to understand how participants in this market has been reacting to that structure. So look at what we have here since the beginning of the week. We can see how participants started on a bearish note here, bringing price into the 131.850, and look at, we started seeing buy pressure here, leading to this beautiful engulfing candle which broke out of that trend line and that key level we identified earlier on the higher time frame. But this is not that long. As you can see, we saw selling pressure resume here, making the 132.800 the highest point price action has ever been, and at the same time our resistant line for this week. We saw an engulfing candle break down the 132.40 level, bringing price back into that structure. So at this point, we have a negation of that bullish momentum earlier. So price action is neutral right now as we are at an equilibrium. So going forward, what are we going to be doing to guide trading activities for today? Well, with this situation here, it's a sign that buyers are still yet to gain that strength to push price to the upside. As you can see, as soon as price broke out of the 132.400, we saw how buyers lost the steam here, and you can see sellers negated all attempt by the buyers to break out of that level, hereby leading to the breakdown of that key level at the 132.4. So with the bullish trend line we identified here at the beginning of the week, you can see we have a bullish trend line here. I'm of the opinion that if price action breaks down the support line, we might be in for a sell move. As you can see, a breakdown of the support line would also have broken down that bullish trend line, and if that happens, we want to be selling below the structure. So you can see how much we are looking out for buying opportunity earlier on the daily time frame, and you can see how things has turned out to give us a clue of how to take advantage of a selling opportunity. So because our mind is focused on that buy position at the beginning, on the daily time frame or on the higher time frame, we don't get locked into that bias. We need to shift as soon as we start seeing signs that the opposite might likely happen. So that is why we want to keep our options open. So below the 131.850 level, we welcome selling opportunities in this market. So let us keep that in mind as we continue to monitor price action. Now, to buy the USDJPY for me at this point, I would rather see a breakout of that resistant line, which is the highest point price action has ever been for this week, to happen for me to join that bullish move. And even if we see a situation where price was unable to break the previous low here and we begin to see some buy pressure resume, then I would join before the 132.800 happens. So what I'm simply saying here is, if this move here was unable to break the previous low here, and instead we begin to see buy pressure resume here, then a breakout or retest of the 132.400 will welcome a buy position, and a further breakout of the 132.800 will welcome another buy position. And as you can see, we are already part of the bullish momentum before even price action breaks out of the neckline at the 133.500 level, where a breakout of the neckline will also welcome more opportunities to add more position. As you can see, we will be having about 3 to 4 positions running if price action moves in that direction. So let's keep this in mind. I'm of the opinion that price action will go to the upside, but if the structure says the otherwise, then we don't have any choice than to get ready to be part of that move. So that is that on the USDJPY for today, and I will be with you in the comment section on my TradingView platform and on my new platform on the Telegram, which I will try to remember to update on that one and keep you updated in that regard. I know with time I'll get used to it, don't worry. So I'll keep you posted in the comment sections as usual, and I wish you best of luck today. And one thing I would like to state here is that today is a public holiday and things might look very, very slow to happen. So we want to be very patient. We don't want to get caught up in this compulsive behavior of making a trade compulsorily. It's not compulsory we make a trade. We have to wait for our positions to mature before opening any position in this market for today. So let's keep calm and watch price action play out in our favor. Then we could actually join whatever momentum that the market is signaling to us. So on this note, I wish you best of luck during the New York and the London session today. And at the same time, I wish you happy Easter to my Christian brothers and sisters out there. I look forward to seeing you in the comment section, and do have a wonderful day. Bye bye.